Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Chicago wheat, Chicago corn, and Kansas City wheat. Hello, and welcome. Before we start, I just want to let you know that no AI, that is artificial intelligence, was ever used in the composition, production, or recognition of any of the patterns, levels, analysis, or in any related items on these, my charts. It's all my own original work, as I think you deserve to have that. So with that, Chicago wheat. Okay, so the action here seems to be getting simpler. You see, one of the earlier features here had been the multiple contradictory head and shoulder patterns and reverse head and shoulders patterns between March and July. However, until changeover in September, the dominant pattern here had been the mid-February to mid-June bearish Andrews pitchfork. More recently, the market had exited this and instead chose to move lower down the path of the previously drawn and shallower bearish dark blue shift pitchfork, but the same move as the bearish Andrews one. This pitchfork gives a better idea of the medium to longer term bearish angle of attack of the market, with the market today in between the dark blue middle time and which is below, currently at 5.15, and the dark blue upper time above, currently at 5.63 and a quarter. Now we next have the bright red neckline extension to the February to April 2024 reverse head and shoulders bottom, which is below. That's running below the market, and that's currently at 5.21. The more I look at this, the more I consider it to be just a nuisance interfering with the market, but at the same time still showing the bearish angle of attack. Finally, recently we had a small unhighlighted bear channel since changeover in September and through to October. Prices utilized this small bear channel, but by late October the market had exited out on the top side, and prices have since risen up through the short medium moving average, currently at 5.29 and a quarter, and flatlining mauve medium moving average, currently 5.38 and a quarter, and gotten capped this week with a possible very small horn top by the overhead flatlining gold long moving average, currently at 5.49. In fact, we're testing that at the moment. And indeed, we've been getting trapped a little between these two, the overhead gold long moving average and the medium moving average, the mauve one below. All this action has created a conundrum. You see, we have an August to date double top at the same time as having potential for a possible September to October bearish cat's ears pattern, a pattern akin to a double bottom, but after a move lower. I would suggest keeping an eye on the main pattern, and that's the dark blue bearish shift pitchfork, as well as the gold long moving average, which has been reasonably good at capping prices in the recent past. But be open to the idea of a double bottom, which could have potential all the way up to the June highs in the 590 area. At the same time, if prices drop down towards the October lows in the 510 to 515 zone, keep an eye out for a trigger to the bearish cat's ears pattern. Chicago corn. The main pattern here had been the now broken February to April bearish shift pitchfork. In mid-September, with changeover, the market exited out above the upper time, but then proceeded to form a new bear channel, utilizing in part the now broken upper time. This was until we started to see prices push up late 2 weeks ago over the upper bear channel line and exploit that move higher. Prices initially looked to the November 2020 high at 439.5 and the lesser Fibonacci line near it as resistance, but they were not good enough. So prices rose up to the next resistance, which is the flatlining gold long moving average, and that's currently at 446. This had previously done an excellent job in capping prices in late September. Near to it is the 50% Fibonacci line for 2025 at 454 3/4, and I suspect this is also somewhat formidable. Just above this is the bright red lower trend line, currently at 457 1/4 of the July 23 to January 24 descending triangle, though I have my doubts about this one, despite how large it once was. So, I said 2 weeks ago, and I quote, "All this movement higher does raise the question as to whether the action since early August, especially noting the fall since changeover, whether this all is a possible bullish halfway hesitation. I'll ponder on that some more. End of quote. Now, I still haven't figured this one out, and I'll still ponder upon it, especially as this week looks like a possible small horn top pattern. Kansas City wheat. We have a major issue here. The major pattern has been the dark blue February to March bearish shift pitch hook. Despite some breaks, it was a good pattern at showing the overall bearish angle of attack, especially the middle time below, currently at 470, and the upper time above, currently at 517.5. This week we had a more substantial break higher. I wouldn't say major just yet, but a more substantial break higher, larger than the earlier breaks, enough that I drew a new, slightly higher and shallower bright green bearish shift pitch hook for the March to June move. Prices this week also pierced the green upper time, currently at 535.5, but failed to stabilize over it. Well, so far anyway, failed to stabilize over it. And we are now back down between, sort of, for most of the day, between the two upper times. The failure to stabilize I put down to erosion from the flatlining medium moving average below, which is currently at 529.25. And perhaps more importantly, the market approaching and rejecting the testing of the overhead flatlining gold long moving averages above that, which is currently at 550. Thus we have a scenario here similar to Chicago wheat. We have a possible August to October double bottom, while at the same time potential for a September to October bearish cat's ears pattern. Now, a third alternative, and it is too early to rate this right now, a third alternative is that the market utilizes this two upper times as a bear channel, but that is one for the future. So please keep an eye on the top side for a full break higher, not a breach, but a full break higher, especially if we can push over the gold long moving average. An alternative for a full break lower under the significant bright red unreconstructed December 1999, yes, a last century uptrend, if only just. December 1999 to date uptrend, which is currently at 508. And then the October low, which is just under 500. However, once we get down that far, well, both the bearish shift pitch hooks may take over with their middle times, which are currently at 482 and 482.75 and 470. Please remember something I said 6 weeks ago, and I repeated ever since, and I quote, "The thing to now remember is there is no fallback pattern should the dark blue bearish shift pitch hook give way. That is the risk on the upside. At the same time, below the August 2024 low, we don't have that much support until we come back down to levels before the gapping move higher and the ancient unreconstructed December 1999 to date uptrend. And that is the risk on the downside. And for now, it seems to be the greater risk." End of quote. Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.